A lot of the time, so I've been day trading now for almost 5 years. There's always a new strategy that comes on the block. And what I found is through, I tried every single strategy. I followed all these gurus who I might add are no longer exist anymore. I've done all of that. The only thing that's actually helped me become profitable and do what I do day in, day out is actually sticking to my own system. Things that have worked for years and years. Okay. Price has been consistent and has moved the same way for over 100 or 200, 300, 400, 500 years. It's been written in every textbook. So my strategy is designed based off of every single fundamental element of price. Let me explain. So we can see here, this is SPY, okay, on Friday. Very simple. We are above VWAP, we are above the 80 MA on the 10-minute chart. I even wrote, if I was to bet today, they squeeze it to the upside. Why? It's because the trend is bullish. They are going to trap noob shorts who keep coming in here trying to hammer the lows. So let's watch this in real time. So price opens up, and the first candle we notice fills the pre-market overnight gap. Okay, it fills it. And you can see when the gap fills, normally it's a good short for a scalp, and that's exactly what happens. It prints a red candle. Now, what happens on the next candle? The next candle, ooh, look at that. It held the 80 MA and held VWAP. It also held, if we look in a little bit more, the pre-market high. Okay, we do not enter anything unless it breaks a pre-market high or pre-market low. And if you don't believe me, here's yesterday's price action where Thursday's pre-market high, reject, chop down the pre-market lows. Pre-market highs, reject, chop back down the pre-market lows. Pre-market highs, reject, chop, chop, chop. This is all chop here. This is untradeable. And if you trade this, you definitely blow your account, especially with a VIX over 20. So we can see that price is still holding a pre-market high. This is bullish. We're above the 8. We're above VWAP. Therefore, we are looking for longs here. And now, look, higher low, higher low. Okay, they're buying the dip here. Look at the curls of the EMAs. So this is our first entry. We bought the SPY, 585 calls right here. Okay, this is a pre-market high retest. The trend is up. We are going to go long. Now, people are going to ask me, where do you sell? Okay, well, I'm going to sell when price starts to slow down. Okay, and we can see that price is slowing down right here. Okay, it's slowing down. So if we put $1,000 in here, okay, let's say we made 200% just for rounding purposes. Okay, we made $2,000. So we're going to sell all those contracts and we're going to roll into the next contracts. And what are we looking for here? So I even alerted this. I was like, guys, like don't chase the highs, wait for pullback for the 10 EMA. 10-minute 80 EMA. However, price was in squeeze mode. In squeeze mode, we do not get complete beautiful pullbacks. But guys, all you had to do is use a 5-minute chart, which every single person and their mom knows about. And we can see it is forming a tight consolidation range here in a bullish trend. Okay. It is forming a flag here. And what happens? As soon as we tap that 8 EMA, it goes nuclear. But allegedly, my strategy doesn't work. So explain to me why, as soon as it taps 80 EMA, you get a candle that looks like this. If the market is 90% algos, do you think algos are buying off this 80 EMA? I don't know. I think I'm going on a tangent here. So that is our second entry. Okay. You can trade the same stock twice. This is how you grow a small account. So you made $2,000 off this move. You're going to take that $2,000 of profit and put it into the second entry. Now you're probably asking, okay, well, where's your stop loss? Okay, your stop loss is if it breaks the 80 EMA. Now, where's your first target? Your first target's gonna be prior day high there. I don't have any other levels. Okay, it goes level to level. So we're clearly gonna go to the prior day high. It's really that simple. And sure enough, we go up to the prior day high. So what price flaws out? Look, we're still long here. Like we're not panic selling on these candles. We're still long. However, when we get to the prior day high, we're gonna take off a half our position. Why are we going to take off half our position? Because this is our first target. And what are we going to do with the rest? We're going to leave runners just in case the prior day high breaks. And that is exactly what happened. It broke the prior day high, and our contracts went absolutely insane mode. And then price starts to stall out here, but we're in runners. We're already up 366% on our contracts. Like it's really no big deal. Like we can risk a little bit. We're almost up 4x on our initial investment. People ask me, Ellie, when do you know to stop out your runners? It's really that simple. Look what happens when we break the 80 EMA. So price is going up, tries to make a high, starts to reject, and then it breaks the 8 EMA and slowly starts to fade back down. That is it. That is it. That is my entire strategy. That is what I've been doing, documented on Twitter for well over 5 years now at this point. Actually, Twitter be 4 years. But guys, I've been doing this. Every time I post a screenshot, I follow the same exact strategy, same rules. breaks the pre-market high above all the EMAs and VWAP, it is a long. Below the pre-market low, below all the EMAs, it is a short. You can spend all the time you want on new strategies. Trend and range is essential to price. Anything that defies trend or defines range, you will not make money. That is how I do it. That is how I made, well over 600% gains from my phone at a doctor's office on a Friday while you were trying to short every pop piece.